Social Security beneficiaries are getting an increase of $2,630. That is what the average Social Security benefit is going to be based on an analysis of the One Big Beautiful Bill Act that President Trump just signed. Now, I did a video about this previously, but I've gotten a lot of questions. Specifically, a lot of you want to know who exactly is eligible for the tax deduction under this bill and how is the income calculated. You wanted me to show you how the income stacks up and what income level is qualifying or eligible for the $6,000 tax deduction in President Trump's One Big Beautiful Bill. And part of the reason is that it's been communicated that a lot of people have been left out of this bill. In fact, half of seniors do not make enough money to see benefits out of this bill. But until now, we have not really talked about the income levels that really qualify for the One Big Beautiful Bill and the tax deduction that come with it. So I have done extensive research and I have good news. I am able to show you what the income level is that qualifies for these tax deductions, whether you are single, married, and filing jointly. And so you can see for yourself that if you are above that income threshold, you are eligible for the 6,000 tax deduction and other tax deduction that you can stack up on top of each other to be able to get the maximum benefit. So if you're wondering where the $2,630 increase comes from, it is a calculation based on what the average senior that is getting the tax deduction is going to get back in their Social Security benefit because they are not going to be paying that amount in taxes. So I'm about to show all that to you. Stay with me till the end of this video. I have a lot I want to cover with you. My name is Kwame Kwade. I am a government benefits expert. I have been helping seniors get retirement benefits they deserve for over 15 years. I create content on Social Security, Medicaid, Medicare, food stamps, and any personal finance issue that affects seniors. We recently also launched a new community for seniors that are 55 plus. I'm going to share that information with you shortly, so make sure you stay up for that. Now, let's talk about the main news I wanted to bring with you because I have covered the One Big Beautiful Bill Act, or the OBBA. OBBBA. I've covered it extensively, but one of the questions that keeps coming up is what are the income thresholds? So I'm going to do three things today. I'm going to share with you the income threshold, and then I'm going to show you an analysis by H&R Block on what they think, how they think this is going to affect taxes. And then I'm also going to show you new tax brackets that have come out as a result of the One Big Beautiful Bill. A lot of people are actually going to see their taxes go down because as part of this bill, the government has published new tax brackets going forward. So there is a lot to cover here, but let's start with the analysis of the income level. So I'm going to share my screen with you and then walk you through how the income levels are going to work. So let me do this very quickly. And then here we go. So this is an analysis from a website that Kitches. And basically what they did was look at the entire bill and then break it down by tax bracket so that when you are trying to figure out whether your income, how much Social Security or disability benefits you're getting, whether you are eligible for the One Big Beautiful Bill tax credit, this is the clearest way you are going to be able to figure that out because it walks you through specific income and how the benefits stack up on top of each other. So before we even look at this table, let's just look at what you're getting because it will make sense when you understand the background to all of this. So I'm going to scroll a little bit up and then show you what the deductions are. So right now, you are going to start the calculations with your standard deduction. So if you're filing taxes, everybody gets the standard deduction, and that standard deduction is now going up a little bit. So in 2025, The TCJA is President Trump's tax bill that passed in 2017. That was the first Trump tax cut that was extended in this OBBA. That was so now you look at a single person, the standard deduction is 15,000 previously. Now in 2025, it's going to go to 15,750. If you're head of household, the standard deduction is 22,500. Now it's going to go to 23,625. If you are married and you're filing jointly, your standard deductions goes to 30,000, from 30,000 to 31,500. So basically, the extension of the Trump tax cuts from 2017, the TCJA, is actually increasing the standard deduction. So that is the first base of the stack. So the figure I'm about to show you, you're going to see at the bottom that there is the standard tax deduction. That is the bottom. And then on top of that, on top of the standard tax deduction, there is also a senior deduction, a deduction that is specifically aimed at seniors. So then let's look at that. That's a $2,000 deduction. So here's what it says. Notably, the temporary age 65 tax deduction is on top of the additional standard deduction given to individuals who are either 65 plus or blind, which adds an extra $2,000 to the standard deduction for single filers, or $1,600 for each eligible married filer. So if you are married and filing jointly, you get $3,200. If you are single, you get $2,000, which means that, as shown below, between the normal standard deduction, the current 65 plus or blind deduction, and the new temporary age 65 plus deduction, households with members age 65 plus are eligible for up to $23,750 in deductions for single filers and $39,100 for joint filers with one spouse, and $46,700 for joint filers with both spouses are at age 65 plus. So that is setting the foundation for what I'm about to show you, because it's important for you to understand that there are three different taxes that seniors age 65 plus are eligible for in terms of deduction. The first one is the increased standard deduction, which I have shown you. The second one is this temporary tax deduction that is only for seniors age 65 plus, is $2,000 extra, and then is 30 if you're single, and then $3,200 if you're married filing jointly. Then on top of that, there is the new $6,000 tax deduction in the one big beautiful bill. So I want to set the stage so that you understand what you are about to see when I talk about stacking tax deduction and why that is important. So let's look at this. Let me try and see if I can move some of this around and give you a good picture. So here it is. So these are the tax deductions all stacking together. So the first one is if you are single. If you're a single person, then you get the $15,750, which is the first deduction. You get the $2,000 additional for age 65 plus, and if you're 65 plus or if you're blind. And then you get the new $6,000 deduction that is part of the one big beautiful bill. So that's the first one. So to answer your question, when you ask me who is eligible for these tax deduction, a simple way to view it is that if you are a senior citizen and you are making more than $23,750 in income, both from your Social Security benefits and other income, then you are eligible to begin to claim some of the deduction, because if your income is below $23,750, then there is nothing to deduct. You have to make more than the three deductions that have been stacked together in order to be able to claim it. So what does this mean? Well, it means that if you are making, let's say, $30,000 in Social Security and other income, you are going to get a little bit of tax deduction. If you are making $40,000 in Social Security and other income, you're going to make a little more because you have more room to deduct more things. And then if you're making 50,000 as an individual between your Social Security and other taxes, then you even have more to be able to deduct. But the simple answer is that anybody making more than $23,750 is going to be able to get some tax relief, because that is when the deductions really kick in, because that is how it stacks up. Now let's look at married filing jointly with one spouse age 65 plus. So you're married, you're filing jointly, but you have one spouse that is 65, the other one is not. Well, you still get the tax deductions, because you're going to get the first deduction, which is $31,500. You're going to get $1,600 because only one person is age 65 plus. And both of the second and third tax deductions are for seniors age 65 plus. So because in this situation only one person is 65 plus, you're going to get the 1,600, and then you're going to get the 6,000 because only one person is 65 plus. So if you are both married filing jointly but only one person is 65 and over, you lose some money, but you don't lose a lot. So your total income has to be above $39,100 as a joint couple filing jointly, but one person is over 65 years old, before you can begin to get relief under this tax cut that Trump just passed. The people that actually get a lot is when you're married, filing jointly, and both spouses are age 65 plus. Those categories of seniors are going to get the entire package. They're going to get the standard deduction, which is $31,500 for married couples. They're going to get $3,200 in the additional deduction, because 1,600 times 2 is 3,200. And then they're going to get another 6,000 because both of them are age 65 plus. So if you are 65 plus and filing jointly, you get $46,700 in deductions. So if both of your income together, your Social Security benefits and other income, is above $46,700, then you can start seeing some tax relief. If your income is below that, then you cannot get any relief, because that is when you begin to see the benefits of the tax deduction. And so what I wanted to share with you and answer a specific question that has been asked a couple of times is, what income qualifies for the one big beautiful bill tax deduction? And I want you to understand that there are 3 different stacks of tax deduction, and it's not just the 6,000. You have to add all 3 of them, because that is how it works. If you're filing with your accountant, that's what they're going to do. They're going to stack all 3 together and then determine if you're eligible. So if you don't make enough money to even file taxes, or you don't make enough money to clear the minimum threshold, which for a single person is $23,750, for a married couple with one person age 65 plus will be $39,100, and for a married couple with both spouses at age 65 plus, which will be $46,700, then you cannot take advantage of the Trump tax cuts. And so then the question is, what about you guys? What about the 50% of seniors who make less than the thresholds that I have indicated in this chart? Well, I am going to tell you shortly what can be done for you, what Congress can do for you this year, because you have been left out. You have been left out of this bill if you don't make more than the threshold that I've just shown on this screen. And so I'm going to walk you through legislation that I think should be passed to help low-income seniors that do not make enough money, who are either single or married and filing jointly, but do not make enough money in combined income or eligible income to be able to take advantage of these amazing tax deduction that benefit the middle class and the upper middle class. So stay with me. I am going to share that information shortly and explain to you about 3 different bills that are currently in front of Congress that I think will make a big difference in helping seniors that feel left out of the one big, beautiful bill. But in the meantime, yesterday, I made an announcement about a school community that we have started. That is for seniors age 55 plus. And I want to share that with you because I've gotten some questions about who is eligible and why we're doing this. Basically, we launched a membership community because you guys, some of you have asked for a place where you can go and interact with each other, interact with me and my team, and also get resources from us that we are not necessarily putting here on YouTube because there's so much we can cover, but we cannot cover that here. And so we created this platform. It's called the Benefits Insider Circle. It's a membership community. And basically, these are some of the things that we've started to cover there. We're going to cover so many things that seniors are worried about or want more information about, but cannot get on YouTube or even on TikTok. You know, part-time job ideas and opportunities, retirement living, how to maximize your income, protecting against scams and fraud, navigating senior living options and housing, health and wellness. This morning I went on a walk and then I shared some of the tips that why I enjoy walking every day and why a lot of seniors will find value in it. Caregiver and family support. And I'm going to be bringing people who are expert in each of these areas to come and share their knowledge with you in a community where you feel seen, you feel heard, you feel supported. So that is what this is about. Now, we also have set up a Facebook group, a free Facebook group that is also going to be part of this whole picture. So I don't want anybody to feel left out. We're just trying to meet everybody where they are. And a lot of you have asked us to create a community where you can be a part of something, feel seen, feel heard, and feel supported. And so we've started that. And also, if you become part of this school community, all the paid guides that we've already created and all future paid guides we're going to create is going to be available to you for free. Currently, these are the 3 that we currently have available for sale, and you're going to get it free as soon as you sign up for this school community. So the whole goal is to help you unlock every dollar, discount, and advantage that you deserve so that you're not missing out on your retirement benefits. And so the first 50 members are going to get it at a very special rate, and that is going to be a permanent rate. Once you're part of the 50 and you get that lower rate, it's never going to change. So here is the address. I'm going to put it in the comments. I'm going to put in the description to this video. And if take a look at it, and if it's something you're interested in, I'll be happy to have you there so that we can provide more support to you guys beyond what you get here for free on YouTube. So I'm looking forward to seeing a lot of you here in our school community. I'll put the link in the comments shortly. So having said that, let's go back to talking about tax bracket while I drop this link for you guys who want to check out our school community. So let me do that shortly, and then I will go back and talk about what you need to know about tax brackets as a result of the one big beautiful bill. Here we go. In the comment section to this video, I am putting in this, and then I'll also be reviewing your comments. So if you have any questions for me, let me know and I'll answer them. I know a lot of you have been saying things already. Let me see here. I'm going to share one very quickly. I think Charles Clemens has said something. The bottom line, the bill does nothing for the ones that need the help the most. It's an unbeautiful bill. Well, Charles, here's the thing. A lot of seniors feel the way you feel because the thing is that the bill, to be honest, caters to the middle class and the upper middle class and the rich. The low income seniors who do not make enough Social Security income to file taxes have not been taken care of as part of this bill. But it doesn't mean that there's nothing that can be done. It just means that the other bills that are out there that were not included in the one big beautiful bill need to now get a focus. So hear me out. Stay through this video. I'm going to share some ideas with you that I think you're going to like. And here's the thing. I've been saying this a lot. I speak one language when it comes to this channel. It's about whatever can be done to strengthen Social Security, Medicare, and the safety net for seniors. And so I'm going to share some bills that are out there that Congress have already written, so that when you see your congressperson at a town hall this summer, when they come to recess and the senator comes and does a town hall, you can go to that town hall educated with information to tell them that, hey, I know specifically what you can do to help us. And so I need you to get behind that. I think that's a more powerful argument versus going in and telling them, what are you going to do for seniors? Because they're going to just tell you a whole bunch of things and nothing's going to happen. But I'm going to equip you with the actual bills that have already there that has bipartisan support that can make a real impact in the lives of seniors that they should get behind. So stay tuned. So the next thing I want to do is talk about tax brackets. So let's look at, out of the big beautiful bill, here are the tax brackets that are coming. No, that's not what I meant to do. Here are the tax brackets that are coming out of it. And it compares to the old tax bracket and the new tax bracket. So the TCJA, I keep saying, is the previous Trump tax cuts that was passed in 2017 that have now been extended. So now, out of that, new tax brackets have now come in and new thresholds have now come in. So if you're a single person, and you make between 0 and 12,100, you are in the 10% tax bracket. Now that is going up slightly. So it's probably about the same in the big beautiful bill. If you're making between 12,116 and 49,000, you are in the 12% tax bracket. Now that is going to 50,142. So they've increased that slightly. And then where things get really interesting is if you're in the 22 tax bracket, it means that you're making between 50,000 and 104,000. And then 24% is 104 and 200,000. So that has pretty much stayed the same. So they have only made changes to tax brackets in the lower threshold. So they've pulled more people into the lower threshold a little bit more and then left everything else the same for the higher income earners. And so these are the threshold for individuals filing as single. So the adjustment has been in the 10 and 12% category for individuals and those who are single. Now let's go to those who are married and filing jointly. You can see there that the same change has happened. And the tax brackets that have been adjusted are the 10, 12, and 22%. Actually, is the same in the other one, is the 10, 12, and 22. So it means that the lower three tax brackets have been adjusted slightly. Everybody else remains the same. And it's the same for married couples. If you look at the 10% category, it's gone up slightly. If you look at the 12%, it's gone up marginally. And then if you look at the 22%, the starting point has been increased a little bit to 100,000. So those are the changes that have been made in the tax bracket as a result of the one big beautiful bill compared to the Trump tax cut. Now, you're probably thinking, what has this got to do with anything? Well, the thing is that it's important to know that when it comes to Social Security benefits and senior income, a lot of people are thinking that Social Security taxes have completely been eliminated. Well, that is actually not true. A lot of seniors are going to see tax relief, but Social Security taxes have not been completely eliminated. And so I am going to tell you why and why it's important to pay attention to these tax bracket, because you need to know where you fall when it comes to taxes. So let's talk about this. And here it is right here in this article that I've been sharing with you. Oh, you're not seeing it, so let me do that. It looks like I need to remove something in order to be able to add something. So let's see if I can do that. Let's see here. And then let's add this to the stage. Remove the media from the stage. Okay, so something is not working here. Give me a moment. Sometimes the technology does not cooperate, so I may have to remove everything that I have, and then I can do this. So let me try one more time. Bear with me. So here we go, and let's see if it worked this time. Okay, there we go. All right. So now the point I was trying to make is that Social Security taxes have not been completely eliminated, and this is the evidence. Notwithstanding the temporary additional 65 plus deduction, what the OBBA does not do is exempt Social Security income from taxation. That is a point you have to be clear about, because the Social Security Administration sent out an email claiming otherwise, and they recently had to retract that email. Well, they didn't retract it, but they corrected it in a blog post. So if somebody is saying that Social Security taxes have been eliminated, it is not true. This was the source of some confusion in the wake of an email sent by the Social Security Administration shortly after the OBBA's enactment that claimed the new law would result in nearly 90% of Social Security beneficiaries owing no tax on their benefits. That claim appears to be based on analysis from the White House Council on Economic Advisors, estimating that under the new law, 88% of Social Security beneficiaries will have total deduction, including the standard deduction, the current 65 plus blunt deduction, and the new temporary 65 plus deduction, which I just explained all of that to you. So you understand what they're saying here. That exceeds their taxable Social Security benefits. However, the assumption in the analysis is that all those deductions offset Social Security income first, rather than the taxpayer's other taxable income. In reality, the deductions are agnostic about the income they are offsetting. They are available regardless of whether the individual was receiving Social Security benefits or not. This is an important point that I think we need to make, because I think the confusion is coming from forgetting that there's an age limit on the OBBBA. So not everybody that is age 65 is collecting Social Security, but everybody that is age 65 and above is able to claim all the benefits that are under the OBBA. So this chart right here does not assume that you are collecting Social Security in order to benefit from it. So I want to be clear on that. Not all seniors that are 65 and older are claiming Social Security, because some are waiting till their full retirement age to start collecting. Some are even waiting all the way to age 70, but they still have taxable income and are able to claim these deductions if they make more money above the threshold. That's number one. So to say that the bill eliminates Social Security taxes completely is false, because Social Security income is still subject to federal taxes if you exceed a certain threshold. And here are the threshold. So as a matter of planning, this matters from a tax planning perspective, because the way Social Security benefits are actually taxed depend greatly on what other income the taxpayer has. If a taxpayer's provisional income exceeds certain limits, their Social Security benefits are taxed at a higher rate. 0% if you're below 25,000 and single, or 32,000 if you're joint, and 50% if between those amounts and 34,000 and 44 if you're married jointly, and even 85% for some people. So there are people who are receiving Social Security benefits where up to 85% of their benefits are taxable. Now, in other words, the higher the taxpayer's AGI, adjusted gross income, the higher the percentage of their Social Security income that gets taxed, which can lead to an extremely high marginal tax rate for 40% or more of income received in the zone of increasing taxation for Social Security benefits. So essentially, they're saying that you are still taxed if you are claiming Social Security benefit and you exceed a certain threshold. The one big beautiful bill is going to help reduce your taxable income but it does not eliminate all Social Security taxes. And then the one final thing I want to share with you is from H&R Block, because they've done an analysis of the Social Security and other taxes in the One Big Beautiful Bill, and specifically how it affects taxes. So let's look at that, and I'll explain what that means and how that impacts your taxes. So here we go. So they are saying that the One Big Beautiful tax changes, how and when they impact you. So there are certain pieces in here that I want to highlight for you to see. And so I'm going to go to, obviously, we've gone over this already. We've gone over the standard deductions, which I explained to you. We've gone through the income tax rates, which I just explained to you. But here are some things that I think that is worth talking about. The first one is the SALT cap, and that is important for seniors who live in states with higher tax rates. So if you live in one of those states where local and state taxes are very high, this one is going to make you happy, because now you can deduct up to $40,000, of state and local taxes if your modified adjusted gross income is at a certain level. So that is important. So that is also going to save seniors some more money if you live in states with higher local taxes. And then another thing that H&R Block is highlighting is, tax rules that were not publicized but should be known. Children are getting tax credit. So if you have grandchildren, this is what their parents need to know, because the higher tax credit is moving from, $2,000 to $2,200 per child, but it phases out when income is $200,000 for a single person and $400,000 for joint. And so essentially, a lot of people are going to be able to claim the higher tax credit. So this is information that you should forward to, people who have children, or if you have grandchildren, forward this to their parents, because this is an increase in the tax deduction that they can claim starting this year's taxes. There is some things in there for adoption, and there is 529 plan expansion that is going to be interesting. People can now deduct up to $20,000 to pay for K to 12 expenses. It's up from $10,000. And for additional non-tuition qualified expenses for K-12, such as books, online learning materials, and tuition. So this is a big deal. Starting 2025 and beyond, if you have a 529 plan, now you can deduct up to $20,000 to pay for K to 12 expenses. That is serious. That is a big deal per child. And so I think that this is one of the areas that a lot of people are not paying attention to, but could make a huge difference. If your kids are in private school or your grandchildren are in private school, this is one area that a lot of people are going to be able to get some relief. And then the vehicle rules. This is also another interesting one that has tax implications. If you buy an American-made car, and the definition is the vehicle must have final assembly in the U.S., and the VIN number must be included on the tax return, you can deduct up to $10,000 in qualified interest. $10,000 in qualified interest, and that's going to run between 2025 and 2028. So that's a lot of vehicle credits that you can deduct based just the interest. That this is something that is new, and it's important to know. And then there are also other benefits. There's something called the Trump Child Savings Account, and I think a lot of seniors are going to be interested in this, where you can, a new type of savings account for children under the age of 18 was created under the bill. The contribution limit will be $5,000 per tax year through 2027, adjusted for inflation after 2027. Employers must also contribute up to $25,500 per year to an employee or a dependent of an employee. So this is an interesting place if you want to. And then Trump accounts will automatically be funded for babies born between 2025 and 2028. The federal government will make a one-time $1,000 contribution per child to a Trump account, or U.S. citizen born during this time. The child must be a U.S. citizen to receive the funding. An account will be automatically created by the federal government if an account was not previously created by the parents. Guys, there's a lot here that you need to forward to people you know who have children or you have grandchildren, and you need their parents to know this, because this is money that could be available to them that they may not even know about, because everybody's making noise about the big items and are forgetting that there's a lot of things that are detailed in the big beautiful bill that could bring real relief to seniors and families. So that is the bulk of what I wanted to share with you today. Now I'm going to go through some of your questions and see what you guys are talking about. But again, I wanted to make sure that I leave you with this new online community that we've started. I've told you there's so much we wanted to cover. This is something that you guys asked for. We now have about 25 people that have already joined, and we just made the announcement yesterday. And I told you the first 50 people are going to get it as a permanent reduced rate, and your rate is never going to increase, because shortly after that it's going to go to the regular price. But we want to make sure that the first 50 people get a lifetime discount on this community, and you get access to our big guides that we've already created: how to maximize your social security in 2025, EBT discount guides, and our extended complete guide to the big beautiful bill. If you want to know everything there is to know about the big beautiful bill, we've created a 20-page document that explains everything specifically as it relates to seniors. And then tomorrow I have a big announcement. We're releasing the senior banking and finance guide. If you want to know where the best places are to put your money in terms of savings accounts, checking accounts, what are the free checking account places in the country by state, by region, what are the best CDs that are available in the country, who pays the most on CDs or high interest savings account, what about fraud and how to protect your accounts? What about other banking products like estate planning? How do you, do a DBA when you are establishing a savings account, so that, you know, in the future that account can pass over to somebody without having to go to probate and all that? All those information has been put in this banking guide that is going to be available for free for all the members that are part of this community. So again, I'm going to put the community link in the comments. If you're interested, we'll be happy to see you there and see how we can help you even maximize your retirement benefits. So now I am going to go into the comments and see what comments you guys have for me that I can address. Let's see here. Now somebody's saying Donald J. Trump will just say those Trump accounts have his name, so they belong to him. Well, I mean, it's the bill says it belongs to children born in 2025 to 2028, and so that's what I'm gonna believe, because that's what the bill says. But that's funny. Uh, Peggy Miller. So that means I don't get anything because I don't have to do taxes. Essentially, yes. The big beautiful bill, for those who do not file taxes, do not get anything really in terms of the tax deduction. So when you hear about the Trump increase, when you hear about the Trump increase, when you hear about the increase in Social Security benefits as a result of the big beautiful bill, it only applies to those who make enough money to file taxes and be able to claim it, because it becomes a reduction in your taxes, and so your benefits increase as a result. So that, unfortunately, that's what it is. Let's see here. So this is from Donna. This is so heartbreaking, helping for those still working but nothing for others. So I promised you that I was going to share some ideas with you on what I think could be done for seniors that are not earning enough money to take advantage of the big beautiful bill deductions. And so I am going to share with you two bills that I think could do this. And I've talked about one almost on all my lives I've done in the last 2 weeks, because I think it's important for you guys to go to those town halls and let them know that you know that this bill exists. And that is the Social Security Expansion Act. The Social Security Expansion Act will increase your benefits by $2,400 a year if it's passed right away. Number one. Number two, for seniors that are making less in Social Security benefits, that are living in poverty, the Social Security Expansion Act will bump your benefit to 125% of the federal poverty level. So you'll be making $18,000 minimum in 2025. And for those seniors who are making getting $1,000 or drawing $1,000 in Social Security benefit or $1,200 in Social Security benefits a month, that $18,000 gives you an extra $6,000 a year, which is over $500, $500 a month increase in your benefit. So it is material. It is a big deal, and this bill has a bipartisan support from both the House and the Senate. It just needs more senators and more congressmen and women to get behind it, to get it over the finish line. And so I think that that is one of the bills that will really make a material difference. And there's a third part of that bill that is also going to fix one big problem, which is how COLA is calculated, the cost of living adjustment. It will fix that calculation so that when you always feel like you are always behind, whenever the cost of living adjustment is announced, you feel like you're always behind because your Medicare premiums eat up your Social Security increase. This Social Security Expansion Act, when passed, will fix that problem too, because it will give a new calculation or a new formula that truly reflects the cost that seniors are facing that gets missed in the current formula. And that's why your cost of living adjustment always feels like it's never equal to inflation, the real inflation that seniors face. Pat is saying Social Security is going to be insolvent by the year 2033, yet they are going to give us an increase that people actually believe that. Well, yes. Let me explain. The Social Security Expansion Act actually pays for itself by increasing or removing, not removing, but increasing the cap on Social Security taxes. Let me explain. So currently, if you make up to $176,100, you pay Social Security taxes. If you make anything above that, you don't pay Social Security taxes on income above that. About 9% of the population make more than $176,100. So it means that there's a lot of money that is not being taxed when it comes to Social Security. And also there's a big problem right now. More people are claiming Social Security than there are enough workers to support them. And so what the Social Security Expansion Act would do is put another limit where if you make more than $250,000 in income, you are going to pay Social Security taxes on income above $250,000. What that does is do all the things that I've talked about. Number one, it's going to save Social Security. The insolvency you're talking about, if all they did was put that $250,000 cap in there and say, hey, if you make more than $250,000, you are going to pay Social Security taxes on that income. That will solve the insolvency problem for the next 75 years. I'm not kidding you. Do your research. It's been published in many studies. I even suggest that they should remove the cap completely. Everybody should pay Social Security taxes on all their income. If you make $1 million, pay Social Security taxes on all of it. If you make 10 million, all of it. If you make 50,000, all of it. Because currently, the way the Social Security tax system is designed, only the lower class and the middle class are paying. The higher income earners do not pay Social Security on all their income. But if you are in lower class or lower income and middle income, you are forced to pay Social Security taxes on all your income, because if you make up to 176,000, which a lot of lower income and middle income people are making, they are forced to pay Social Security taxes on everything they make. So this bill tries to fix that. So not only will it save Social Security for 75 years, it will put $200,400 in your pocket every year in an increase. It will fix the COLA calculation so that you can get more cost of living adjustment. And for seniors that are living in poverty, it will peg your Social Security check to 125% on the federal poverty level chart, which means that in 2025, you're going to get at least $18,000 in benefits. This bill is already out there. You can Google it. It's called the Social Security Expansion Act, and read up on it. So if you ask me, what should be done for seniors that did not get anything in the big, beautiful bill? There is your answer. Pass the Social Security Expansion Act and bring real relief to seniors that are on low income that did not benefit. And here is Sharon. We need an increase in our monthly checks. We are the ones that don't make enough to pay taxes, so we lose again. We get nothing. This is bull. I agree with you. And I think the Social Security Expansion Act is the way to go. And if you watched my video yesterday, I informed you that the government owes you $370 in an increase, because that is how much you have lost in your purchasing power, because inflation is always higher than your cost of living adjustment. So they did a study. The Senior Citizens League did a study and found out that since 2010, seniors have lost $370 in purchasing power, because cost of living adjustment is always lower than inflation, or inflation is always higher than your cost of living adjustment. So you're being cheated every year, and that's why a lot of seniors are falling behind. So that is what I wanted to talk to you about today. If you have any questions at all, hit me up in the comment section below. I am happy to answer them. And if you're interested in our membership community, please sign up. I know you're going to get 50 times the value of what you're going to pay. So I am confident of that, and I guarantee it. So I am looking forward to seeing some of you there. So until tomorrow, I'll be back tomorrow with another live, bringing you the latest news and updates, anything in and out of Congress that's going to affect your benefits. If you like what you heard, please hit the like button, hit the subscribe button, share this video with anybody you think will benefit. And until I see you tomorrow, have a good night and God bless.